Welcome, my friends. If you follow this channel, you already know that layoffs are basically in full-on mode in technology companies. In fact, there has been so much layoff news that I have had difficulty finding time to cover anything else. You have heard about the 50% layoff at Twitter, the 11,000-person layoff at Meta, and the 10,000-person layoff at Amazon, and many others. But I know that you are all waiting to hear how many people Google will lay off. So far, all we have heard about is stealth layoffs at Google. And if you follow this channel, you already know that a stealth layoff is a quiet, individualized layoff. Well, today, we are hearing reports that a major activist Google shareholder is demanding layoffs. Activist investor TCI Fund Management holds a $6 billion stake in Google parent company, Alphabet. Today, TCI told Google CEO Sundar Pichai that both salary expenses and headcount must come down. And this must be done using a much more aggressive action than by stealth layoffs. TCI has made the case that compensation and headcount at Google are just way too high. Much higher, in fact, than at other companies in the rest of Silicon Valley. Google remains one of a few tech companies to resist major layoffs, despite announcing a hiring slowdown recently. A month ago, in his strongest language yet, Google CEO Sundar Pichai telegraphed that layoffs are coming to Google. In his Q2 earnings call, Pichai said that Google's performance was far from good. He also said that Google is not performing as well as it should with the employee base that it has. If you follow this channel, you already know that Pichai gave a now infamous speech at the Vox Code conference in Los Angeles. At the conference, Pichai said that he is determined to make Google run on fewer resources as a slew of business challenges emerged. Pichai has set an efficiency improvement target of 20%. This video continues our coverage of the wave of layoffs sweeping the United States and the ever more real prospect of layoffs at Google. What does it mean for Google? What does it mean for technology companies? What does it mean for Silicon Valley? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Activist shareholder TCI Management has said that Google must take aggressive action to trim headcount and salary expense. Google needs to deliver a clear action plan to investors, TCI Fund Management wrote in a letter to CEO Sundar Pichai. TCI Management has a stake in the Alphabet valued at $6 billion. Even with that seemingly high stake, TCI is still not one of the top 20 Google shareholders. TCI's stake in Alphabet is about 0.27% of outstanding Alphabet shares. But TCI has steadily increased its stake since 2017. For those of you not already familiar, Alphabet has three classes of shares. Co-founders Larry Page and Sergey Brin still have complete voting control in the company. That is because, together, the two founders own almost all of the Class B shares. So, it is probably impossible for an activist shareholder to take control. Our conversations with former executives suggest that the business could be operated more effectively with significantly fewer employees, read the letter from TCI. Overstaffing at tech companies is a poorly kept secret in Silicon Valley, the letter also said. 2022 has seen an absolute parade of layoffs in technology companies. Twitter laid off 50% of its employees. Meta laid off 11,000 employees. Amazon laid off 10,000 employees. Snap laid off 20% about a month ago. Google, one of the few large tech companies that has not publicly announced headcount reductions. Like many tech CEOs, Pichai announced a hiring slowdown. Scarcity breeds clarity, said Pichai. Google headcount has increased at an annual rate of 20% since 2017, said the TCI letter. 2017 was the year that TCI started building their stock position in Alphabet. TCI says that this rate of hiring is excessive. Alphabet disclosed median compensation valued at $295,884 for 2021, which is also excessive, said the TCI letter. Historically, Google's compensation has basically been the gold standard in technology companies. We acknowledge that Alphabet employs some of the most talented and brightest computer scientists, the letter continued. But these represent only a fraction of the employee base, the TCI letter added. For non-engineering staff, the letter read, compensation should fall in line with other technology companies, the letter continued. TCI wants Google to increase its share buybacks. And TCI is demanding creation of an EBIT margin target for Google services. For those of you not familiar, EBIT is an accounting acronym that stands for earnings before interest and taxes. EBIT margin is a benchmark measure of a company's operating profit as a percentage of revenue. Google services reported a 39% EBIT margin in 2021. TCI believes that a reasonable target is 40%. In addition, TCI said that Google's other bets financial category, their so-called moonshot division, demanded immediate action. The TCI letter drew specific attention to self-driving division Waymo. TCI says that Waymo has failed to justify its excessive investment. Altimeter management had similar complaints and sent a similar letter to Meta CEO Mark Zuckerberg. Altimeter demanded a dramatic reduction in Reality Labs' expenses. Shares in Alphabet have fallen more than 30% so far in 2022. Layoffs at big tech companies started with a quiet trickle, but now appear to be accelerating. This includes established big names, Web3 unicorns, and everything in between, except, of course, for Google. Google CEO Sundar Pichai has set a goal for Google to become 20% more efficient. Reading between the lines, this means headcount reductions. After years of unbridled headcount and salary growth, Google is facing economic challenges like never before. Like other corporate chiefs, Pichai pointed out that there is economic uncertainty about the future. Ad spending, a primary source of Google revenue, has slowed significantly. The more we try to understand the macroeconomic, we feel very uncertain about it, Pichai said. The macroeconomic performance is correlated to ad spend, consumer spend and so on, he added. I cannot control macroeconomic factors, Pichai noted. But the rapid headcount increase of the past few years has made Google slower. We need to be really productive in order to have maximum impact on performance and success, Pichai also noted. Earlier this year, Pichai launched a corporate initiative called Simplicity Sprint. The goal of this initiative is to refocus Google on getting better results faster. Google recently reported its second consecutive quarter earnings and revenue misses. Last year, rank and file employees criticized Google leadership for poor pay, promotions and execution. Employees cited a growing bureaucracy at Google, and executives agreed. Across everything we do, we can be slower to make decisions, Pichai said Tuesday. You look at it end to end and figure out how to make the company 20% more productive, Pichai added. Sometimes there are areas to make progress where you have 3 people making decisions, Pichai continued. Understanding that and bringing it down to 2 or 1 improves efficiency by 20%, he added. Google employees have become known for a practice, rest and vest. This practice depicted in a fictional TV show called Silicon Valley. Pichai said that he never saw that TV show. But what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.